Hello, Jason here. Today is May 10th, and I wanted to spend just a couple of minutes going through the two newest indicators that we've developed here at the Oil Trading Group. We think you'll find them to be quite useful in your trading. All right, so let's take a look here. You're looking at a couple of different things here. First of all, you're looking at the trading plan from, on the left-hand side of the screen, this is the trading plan from May the 7th. And you're also looking at the right-hand side of your screen, a 1-minute chart from May the 7th as well. Also, what I've done on this chart, and we're going to talk about what's on this chart here in just a minute, but one of the things that I've done just for the sake of expediting this video is these dots and triangles. They're to the downside, or expected shorts, are colored in gold, and the expected longs are colored in blue. So what we are expecting here is at these particular times of the day for the market to move, and then once they move, there is a projected direction of that move. We indicate these times on your OTG trade plan, and we indicate these on every day before the market opens. So as you're signing in the morning, generally this is updated the night before. But at worst case scenario, it's updated at about 6 a.m., no later than 6 a.m. Central Time. And these will have the times of the expected moves throughout the day for the entire session. Now, I'm going to draw your attention really quickly. This gold dot up here at 8:02 a.m. This is considered to be a minor move within the trend. And you look here at 8:02 a.m., the projected direction here is short. And you can see again, that on the chart, I've marked that at 8:02 a.m. At 8:12 a.m., we had an indication that the market would be looking to get short here at 8:12 a.m., and that's indicated on the chart here as well. So again, you can see blue dots, blue triangles, gold dots, gold triangles, representing times that we're expecting the move to occur, and in that probable direction. The second thing that you see on this chart is you see red dashes, red triangles, and then you also see green dashes and green triangles. These green dashes and green triangles represent the aggressive trend up, as represented by the green dashes, and the conservative trend represented by the green triangles. Same thing on the other side. If the market is, if the aggressive short-term trend is to the downside, then you'll see red dashes. And if the longer-term trend is to the downside, you will see red triangles. Now, there are going to be times when you're going to see dashes and triangles in opposite directions. So, for example, you see red dashes here and you see green triangles here, right? This means that the longer term trend is still long, but the shorter term trend has already begun to roll over. Okay, so again, you see that here. Longer term trend is still long, but the shorter term trend is to the downside, and you can have that happen in the opposite direction as well, and we'll find one of those in a minute. That is your OTG trend finder indicator that is pointing out which direction is the trend, the current trend is. So the way that this new setup works, and these two work together, when we get a projected time that we're expecting the market to move, as represented by these dots and triangles on your screen, that line up with both the aggressive trend and the longer term trend, then you have a valid entry. The entry would be on the next bar. So if this is a valid signal bar here, or signal time right here, and it is, right? It's projected to the short side, and the trend, both the long and the short-term trend, are in the direction of the projected move. And at that move time, then you would have a valid entry. So in this case, I'm going to mark that valid entry. It's the open of this next bar. I'm going to mark that valid entry as a short with a red triangle right there, or a red arrow to the downside. Okay, we're going to go through and mark this chart up. This was the 7th. We're going to look at the 7th and the 8th. First thing, though, I want you to do is the software, the additional buttons you've seen down at the bottom is the back testing software that we use. So what I do basically is I can mark up these charts with entries that would be valid at that particular time, and then based on the parameters that I have set forth in the backtesting software, it will spit out the results. Okay, so let's go ahead and mark this chart up. I'm going to bring this to a full screen look here so we can go through and mark the chart up here. So this is May 7th, and again, we had a down signal. The trend was in our favor, so we would have been looking to get short on the open of that next bar. Okay, so I can tell you just by looking at this chart, there would be no need to get in on the next bar here at this point, because we would still be in short from this previous bar. Now, the way that the backtesting software is set up, at this point so that it will either A, hit the targets, and the targets are set for 4 contracts, 2 off at 15 ticks, 1 off at 30 ticks, and the final one off at 50 ticks. When it gets to break even, or when it gets to 10 ticks, the stop will automatically move to break even. And then the market will not, the market will continue to move forward until it hits the standard stop line. That's represented by these red triangles. So as the market continues to move down, it will either go to 50 ticks or it will come back and stop out here at this trailing stop, which is the aggressive trailing stop. Now, you could set the trailing stop to the aggressive, or you could set it for whatever really you want it to. But for the purposes of this discussion right now, we are looking for 2 contracts to come off at 15 ticks, 1 to come off at 30 ticks, and the final one to come off at 50 ticks. All right, so we're going to ignore this indicator here because, again, we can see that it really never hits the aggressive stop all the way down the chart. Okay, it never really hits that. So you get 2 more indicators here, both telling you that you're expecting moves to the top side. Right, this is a time of the day where we're expecting a move, and the probability is for that to be long. Well, neither one of these meet the criteria because, again, both filters are to the downside short. Remember, both filters, in order for this long to be valid, both filters would have needed to have been underneath this, telling us that the trend was to the long side. Okay, so that is still a valid short. Let's go ahead and, well, actually, we'll just continue on here. And the next signal you get is here at 9:59 a.m. And again, all of these would be on your trade plan. So again, right down here at 9:59 a.m., you could see on your trade plan that you had a potential long area here, 9:59 a.m., and that is represented by this blue dot here on your chart. Again, just keeping in mind that I have pre-populated these charts for the purposes of making this video go a bit quicker. So again, the short-term filters are telling you that it's long, but the long-term filters are still telling you it's short, not a valid entry. Same thing here. All indications are that it's to the long side. Even though you do get this move down, it is short-lived because it is against the trend. But again, these trend filters need to line up. Your next indication, again, you get a couple of more indications here, but again, neither one are valid. You don't get your next valid entry until right here. Okay? Until right here. That's your next valid entry. The long-term sentiment is to the downside. The short-term sentiment also to the downside. And so your next entry is going to be at the open of this next bar, which is right here. Okay? That's your next entry. All right, your stop, remember, your stop is back here behind the bigger picture trending idea here, and that's where your stop would be located initially. All right, so you can see the market continues to move down. You get another entry right here. This is, again, with the filter. This looks like, let's see here. The entry here is 59.53 and 59.03. This is, okay, so right here. And then this is your 50 tick mark about here. So again, you would look to get short again here. Okay. This is the open of the next bar. And remember, your stops are back here behind this area right here. All right. So this is not long. This filter, again, still short. At the open of this bar here, the filter was still short. Again, you had another filter area right here. You could go into this area here. That would be the next bar, right? Your shorts are lined up here, and this would be the next short. And then the market continues to push down, and then we're at the end of the day here. So let's just take a look at how day one is, how day one ended up here on this. So you go ahead and you click Get Performance, and you can see that we had 4 trades, 4 lots on each trade. That gives you 16 total trades. Your profit on this particular day on 4 lots would be $3,180 or 318 ticks. So let's analyze this first trade. All right. Taking a look here at this first trade, you would have gotten in up here. Your break-even trigger was here, right? 10 ticks was your break-even trigger. You took 2 off at 30, 1 off at an additional 30 ticks, and then you got all the way down here to 50. So you had your first take profit up here. That was 2 off at 30. Again, you had an additional one off here at 30, and then you got to your final last one off at 50 ticks, and you can see here that that is a total of 110 ticks on that particular trade. Now, if you wanted to continue to trade that day, and we went ahead and marked up the charts here, you continue back here to the next place where we found our entry. Remember, these were not valid because they didn't line up with your filters, and you continue to push through here. You had another trade here, okay? This one lined up. Now, if you had your stop at the aggressive filter here at 59.65, your entry would have been 53, would have been 12 tick stop, would have taken you out to the tick. But remember, I have my stop up here at this at the more conservative trend line up here at the top. And again, you can see we hit the first target, the second target, and third target. And what this software is doing is it is telling us that right here we've had a cumulative today of 220 ticks on 2 trades. All right, your next trade up here at this area right here, we hit the break-even trigger. We hit the first profit, 2 off at 15 ticks, gave you 30 ticks, and you can see the market came back up and took you out at your what was break-even and ended up being also the less aggressive trailing stop as well. Once it tagged that, it took you 2 out at break even, and so you've got a running total of plus 250 ticks on 3 trades. Your next trade here, your final trade of the day, was short here, and again you can see that the market came back up. If your stop would have been here, your entry point was right here at 58.92. Would have come back and taken you out at 99, 7 ticks, and then ended up flushing down. But again, for the purposes and the sake of this back testing, I am using the standard trending line here, and you took 2 off at 2 off at 15 ticks for 30 total, 1 more off at 30, giving you a grand total, and then the final one came back up and took you out at your trailing stop, just better than break even. In fact, it was break even plus 8. So a total of 318 ticks today on 4 trades on this particular day. Not bad, if I do say so myself. So let's take a look here at the at May 8th. We'll go ahead and load up the trading plan for May 8th. So this is the trading plan here for the 8th, and I've done the same thing on this particular chart. I've gone ahead and pre-populated. I went ahead and pre-populated the chart with the times for that particular day. So let's escape out of this. Okay. And so we come back here, and you can see, we'll come back to 8 a.m. All right, so the first long was here at 8:27 a.m., and that's right here on your chart. And again, this chart's just running, by the way, from 8 o'clock in the morning. So these that you see at 7:36, 48, and 57, they're not here highlighted because we are looking only after 8 a.m. So again, this chart has been pre-populated. So let's do the same thing here. Let's go through and identify areas here. Now again, this would not be a valid entry. It's not with the trend. Again, this would not be a valid entry. It's not with the trend. This one, not a valid entry because again, the trends don't line up. The The bigger picture is still telling you short. The smaller picture, smaller indication still is telling you long. So those don't line up. Your first one that lines up is not until we get here. And this is at, so this would be your first trade of the day here. And this would be at 10:04 a.m. So we would look again to get long on the open of this bar. Okay. And then you would be looking to push up here. Again, no, not with the trend here, even though that's a time frame entry, not with the trend. Continuing to look around, not with the trend. Again, the trends don't line up here. This is against the trend. Trends don't line up. And your first indication is, or your next indication is a short right here. Let's make sure. Actually, that's not correct because these filters, again, this is the long filter, still telling you long, and that's still telling you short. All right, so you do switch over to the long here. This does give you an entry that looks like it's going to take you out right here at the long, and I believe that is going to probably have taken you out at that point. And that would that's all you would have there on the day. So again, you'd have a long entry here. We're going to come back and look. This one does line up because the longer term trend is in line. The shorter term trend is also in line, and that does line you up there. So let's take a look here. Come back and we'll hit the, make sure I didn't miss anything here. Okay, that's not valid. That one's not valid, and that one is valid. Okay, so that's all that was on the 8th. And I remember the 8th being a fairly slow day. Go ahead and click performance here. You do have this indication here. This one would have gotten you the 110 ticks, right? Would have gone up, would have gotten you 110 ticks on 4 lots. There's your 15, 2 off at 15, 1 off at 30, and then 1 off here at 59.12. Now, if you come back in here and add your OTG support and resistance levels, this was coming in right off of a support level. There is a very good chance that you could have held on for an additional 59.12 up to the top of the zone here, 59.33, so an additional 21 ticks here potentially. But again, we're just doing this strictly by the rules at this point. And so, again, I just want you to know that when you put this within context of your support and resistance levels, it also tends to be very strong as well. So let's come back here to that final trade, the one that we know doesn't work out. And I think it's going to be here. Whoops, let's keep going. Keep going here. We know it doesn't work out. Okay, so you would have had, we'll turn these off here because that wouldn't have helped you. You had the long. All right, so this was the signal. The next bar, you had a double information here telling you that the long looked pretty good, and it did come down and take you out. So that's telling you 4 at minus 76 ticks, right? So that is 19 ticks on the stop here from the entry. And so over the course of 2 trading days here, it was 35.20, 352 ticks. Would have been your haul for 2 days. Now, you also, if you don't, and again, this is the way I would have done it in the trading room. I can tell you right now, this is the way I would have done it in the trading room. If I would have made 110 ticks at 10 o'clock in the morning, I would not have sat through and waited till 12:42 to take another trade. And you can pretty much count on that. And so then really right here, you would have made 110 ticks. It would be 10:15 in the morning. That likely would have been it for me on the day, and you would have been up a total of 4,280 ticks. Sorry, 428 ticks or $4,280. But that is, for the sake of this discussion, we do need to go ahead and put this one back on the chart. That would have been long right here. And you go to calculate the performance. That gives you 352 ticks over the course of 2 days. Not a bad couple of days. Now, the other thing that I've done here, and I want to show you this really quickly, is I did a back testing study, just like I showed you right there, that encompassed the trading dates of 11/17 through 5/8 yesterday of 2014. Now, this is an 8-page document, and I go through the objectives that I went through. I go through the objective that I tried to get through, the methodology of the of the back testing. I show you some examples of what occurred here, and then I give you what the results of using the standard filter, the aggressive filter, and a 10-tick stop for 4 contracts, 3, 2, and 1 lot. I gave you that time frame for the 1 lot as well. And then I added a summary piece to this. So if you are interested in seeing the back testing results and getting a copy of these back testing results, there's going to be a link inside the email that I'm going to send to you. Take a look at that. Send us an email, and we'll make sure you get a copy of these back testing results. But again, this is our newest program. We think that it's going to be something that is extremely lucrative and has the potential to be a very exciting addition to the arsenal here at the Oil Trading Group. So, as always, I want to say thank you for participating and watching the video here today. And until next time, I want to wish you good luck and good trading.